Now, let's put this 5-minute checklist to work and let's walk through the examples of a whole bunch of stocks that people gave. And let's see how many of those we can go through and how quick. And I'll show you how quick it is to walk through something like this. So here's our Telegram community. So I already walked through United Health. Let's walk through Coin. So first thing you want to do is go into Finviz, type in Coin. Coin is Coinbase. And PE is 46.83. Let's see. Now, 46.83 means that people are paying 46.83 times every $1 of earning the company has. This company is in the financial data and stock exchange. So let's see what the industry is like. Financial. So nothing. So that's what I was saying. Remember, everything doesn't come up. All industries don't show up. The only industry I see in finance is mortgage finance. It may or may not be related. So maybe let's ignore that. Let's go straight to looking at this company's history. So I will type in Coin. In full ratio, there's Coinbase. Let's go to PE ratio, scroll down. So today the PE is sitting at 42.2, average is 66.56. So currently it's trading below the typical average. But let's have a look at something. Look at this. First of all, this company hasn't been in existence for too long because all I have is the PE goes as back as December 2023. Is there more? No, there is some more. Okay, so there is PE ratio for previous years as well. And we have no PE ratio for some years. Remember when there's no PE ratio? That typically means a company was making losses at that time. So these are flags that you want to look at. Also, other thing is you notice that there was this one specific year, the PE was very high. So people paid a lot more than each dollar of earnings. So if you were to ignore this, what is the average? Is this PE is 434, and a typical PE ranges around 36, 27. So typical PE is around, let's say, around this, which is 23. So today, if the PE is 42 and ignoring this big spike and average PE is 23, then that means today the stock its PE is much higher than what the typical PE would be. So these are some of the estimates you can do. Now, does this mean that you stop this completely? No, not necessarily. This is just a flag. So now it just now gives you more information. So you can start to dig deeper into the company. Next thing, let's look at the PEG ratio. So go back to finance.yahoo.com and look at the PEG ratio. Oh, look, there is nothing in the PEG ratio. So why would there be nothing in the PEG ratio? Remember, PEG ratio is PE divided by growth. So maybe the growth is negative. Is that future growth expectation negative? Look right here. PE next 5 years, negative 3.5. So now you have to make the decision. Do you want to invest in a company which has these kinds of indicators? Next thing you want to look at is the financials of the company. So the fundamentals. So let's go to finance.yahoo.com and type in Coin. There you go. Type Coin, go to financials. Let's look at income statement of this. And revenue. Revenue is 7 billion, then went down to 3.19, then went down further to 3.10, then jumped up to 6. Okay, so what is the next net income? Look at this. Net income was 3 billion, then went down to a loss of 2.6 billion, then went up to 94 million, now 2.57 billion, and the trailing 12 months, 1.4 billion. So this gives you an idea of what the fundamentals are. This should enable you better to make a decision. And obviously you can do a Google search to see what the hype is around it. So, that gives you a better idea of whether you want to get into this or not. Next is ENVX. So Krishna gave this. I had never heard of this company, by the way. So I searched it up last night. It was interesting. Okay. So ENVX, there it is. And ENVX Corporation. So let's see what the numbers turn out here. So first thing I want to look at is the PE. Check it out. PE is nothing. So price over earnings. So when is PE ratio shown to be nothing? Well, when the company is a loss-making company. So for that, let's go straight to finance.yahoo.com. Let's type in ENVX, hit enter. There it is. Go to financials. So revenue, 0. then 6 million, 7 million, 23 million, trailing 12 months, 22 million. Net income, loss of 125 million, loss of 51 million, loss of 214 million, loss of 222 million, and currently sitting at $199 million loss. So folks, that will give you some understanding, Krishna, of what you want to do with this company. Next company is, Deepak, you asked for Doug. I don't know what this was. D-O-U-G. Maybe it was this. Oh yeah, okay. Doug. All right, let's see. So PE ratio, nothing, right? So why is PE ratio nothing? Let's go back to finance.yahoo.com. It's likely this is a loss-making company. So there it is. Financials. So there is revenue. Let's go to net income. There you go. Loss-making company. That's why PE is showing. PE is not showing anything. Okay. Next company you want to look at. So remember what I'm trying to show is look how quickly you can start to essentially peel the layers of the onion of any company and see where it really stands as opposed to just going with hype. Next is AMD. AMD, we all know it's a company that competes with Intel, but let's have a look at it. AMD. So first thing I want to look at is PE. PE is 85.02, which means people as of today are willing to pay 85.02 times for every dollar of earning that this company has. So 85.02. So is this too high, too low? Well, we got to see. So it's in semiconductor industry. Let's see what is the average PE in semiconductor. So there's semiconductors. Average PE is 29.5 and 28. So around this one, 28, 29. AMD, its PE is 85.02. So then you have to see, okay, are there other competitors that may be worth paying better for? But now we need to see what is the average PE of this company? Is this maybe just a very high PE company? So let's go into full ratio and type in AMD. There's advanced micro devices. Go to PE ratio here in the top menu. Notice, oh, look at this. The average of AMD is 142.09 and today it's 84. So that's interesting. Now let's go back and look at the 5-year of this company. Check this out. While the average, when you look at everything, the average PE ratio of AMD is 142, notice that there were 2 years when the PE was unusually high. So one was price to earning was sitting at 408 and other price to earning was sitting at 856. And one year when the PE didn't exist, so probably it made a loss. So that basically means that you now need to go into the financials of this company and analyze this company. You can also say that, all right, what if I were to just ignore these two and eyeball quickly to see what the average PE would be of this company? So if I were to say, again, eyeballing obviously is, there's a huge degree of error. So you can do whatever. You can do more refined estimates, but I'm just doing eyeballing. So but you are allowed to do much more deeper analysis. So let's say this somewhere here would be more of a reasonable price to earning, 123 maybe. So if I go with that, then today's may seem reasonable. Next thing we need to look at is PEG ratio because we need to estimate it and compare it with growth. So here's a PEG ratio. PEG ratio is 2.92. Remember I had said that if the PEG is above 2, that should start to say that, maybe this company is overvalued. Again, it's not a hard and set rule, but it's just, it's giving you some information about what this means. And remember I had said, these are not hard rules. They're just filters to give you some indication. Okay, next thing we need to look at is the financials. So go to finance.yahoo.com. Let's type in AMD. Go to financials and see how this company is doing. All right. So revenue, 16 billion, 23 billion, 22, 25, 27. So overall revenue has been growing and have the net income been growing at the same rate. 3.1 billion. No, then it went down to 1.3 billion. Then it went down again to 854 million. then it went up, and then it went up. So now you need to make a decision that while the revenue has been growing, the net income didn't keep pace. What's going on? Now you can go in and start to investigate this company further. Open up the financial statements. You can open up the earning reports. You can look at the competitives, and then that would say whether this is okay or not. Next company. Costco. Okay, let's look at Costco. Go to Finviz. Costco. Okay. So Costco's PE is 58.82. That means for every $1 in earning, people are willing to pay 58.82 times to buy its stock. Is that reasonable? I don't know. It's the industry is discount store. So let's look at discount store. Search, not here. Search, Control F. Discount stores. There you go. So discount store is 30.39. That's an average PE in this industry. Costco is 58, so almost double. Okay, let's look at its historical PE performance. So Costco in fullratio.com, go to PE ratio. All right. So average PE of Costco is 36.49. Today it's almost double of that, little less than almost double. So 58.74. So that means today its cost is a lot higher than what people have typically paid for $1 in earning for this stock. Next, let's look at the growth of this company. So the growth of, or which is PEG ratio, sorry. So let's look at the PEG ratio. The PEG ratio is 5.94. Remember, anything over 2 is typically considered overvalued. So this is a 5.94. So that gives you some indication of where the stock may be at. Next, we need to look at the financials and the fundamentals of the company, revenue and net income. So go to finance.yahoo.com, type in Costco, C-O-S-T, go to financials and income statement. Look at this, 195 billion, 226, slightly dipped to 242, then went up to 254, 264 after that, trading 12 months. So revenue has been very good. Net income, 5 billion, 5.8 billion, 6.2 billion, 7.3 billion, 7.6 billion. That means foundationally, from the fundamentals, the company is very strong. The revenue and the net income have kept pace and they're both moving in the same direction. But because the PE and PEG ratios are showing something different, that's where now you need more investigation. Next company we have is HIMSS. Let's have a look at HIMSS. Finance.yahoo.com. HIMSS. And you guys can all be doing, similar analysis on the side of same companies or different companies that you have. You can actually maybe even run through the same company so you get a habit of which tabs I'm opening and which websites I'm visiting. Okay, so HIMSS, which stands for HIMSS and HERS Healthcare Inc., its PE is 82.88, which means for every $1 in earning, people are paying right now $82.88 to purchase the stock of this company. Or times, sorry, 82.88 times for every dollar of earning. Now, what is the industry of this company? It's household and personal products. So let's go to the industry comparison. Household. Oh, there you go. Household and personal products. Average PE is 24 times. So HIMSS PE is it 24 times? I think it's a lot more, right? It's 82 times, so a lot higher. Now, let's look at the past performance of the PE of HIMSS. So I will type HIMSS in fullratio.com. There is PE ratio. Okay. Interesting. Today the PE is 76.64 based on this site, close to the other one as well, but it's 76.64. But notice that the PE ratio doesn't exist for anything before June. Now that makes me think, is this a new company? I don't know. Let's go to 5 years. Nothing. So, you now have to make a decision. Do you want to invest in a company that's very new? And although it doesn't have an average PE ratio, if you just want to eyeball, ignore the 2024 because this seems like the very first time it was released. What is the average PE? Average PE is somewhere around here, which is maybe 41. So currently it's 76 times, so a lot higher. Next thing we need to look at is what is a PEG? So PEG is 2.36. Again, PEG of over 2 is possibly overvalued, especially if a company's growth is slowing down. So please pay attention to that. Now, let's look at the financials of this company. So go back to finance.yahoo.com and let's type in HIMSS. Was that the company I was looking at? HIMSS? Yeah. All right. So financials. All right. So 271 million, then went to 526 million, 872 million, 1.4 billion, and then 1.7 billion trailing 12 months. Very, very good. Revenue is good. Net income. Uh-oh. It's a loss-making company. Minus 107 million, minus 65 million, minus 23 million. Then it went up to 126 and 164. So is the growth expected to be same? That's where you have to think, right? I like to invest in companies that have had consistent growth for at least 5-10 years, right? So this doesn't meet that criteria. But the decision to purchase or not, I mean, that depends on what kind of risk you want to take. Let's do some more. Gaurav gave a whole lot. Gaurav, let me look at yours. So RIOT. RIOT, RIOT Platforms. It's a company it's a capital markets company in financials. It has no PE. No PE means this is a loss-making company. So if I go to finance.yahoo.com, RIOT, check this out, go to financials. Revenue, yeah, there's revenue 213, 259, 280, 376, and 458. Revenue has been increasing. What has the net income been doing? Minus 15 million loss, minus $500 million loss, minus 49 million loss, then plus 109. Now this trailing 12 months minus $389 million loss. So that's how you want to look at them. Let me look at a few more companies that people have asked. Somebody asked here, what's the latest somebody asked? Okay, Manish asked QS. Let's go to QS. Let's go to FinViz. Okay. QS. Does it show up? Yeah. QuantumScape. Consumer cyclical auto parts. Let's see. PE, no PE. So why is there no PE? Remember, when no PE comes up, it typically means it's a loss-making company. So let me go to finance.yahoo.com and search this up. Financials. Revenue, zero revenue. Net income, loss. So that means this company is probably running on just debt. A lot of people came today, and I really appreciate you taking your lunch hour. We will see you again next time, and see you back in the Telegram channel. Bye-bye.